And now joining me is Derek Georgino, NTD contributor and risk consultant in the greater LA area. So Derek, I want to talk to you about retirement today. It seems like the cost to retire has been increasing. Tell us a bit more about that, why that is, and what the administration is doing.
Yeah, well, Don, the cost to retire is skyrocketing for most retirees in America. And the Biden administration, in response to that, has announced that they're going to try to crack down on what they call hidden junk fees in retirement investment advice that people receive. In other words, commissions and other remuneration that a financial advisor might receive for recommending specifically insurance investment products, fixed income annuities, commodity investment instruments, and so forth, which were not previously subject to the same rigor of SEC regulations as other investment products that are recommended and sold in the market. This is nonsense, in my opinion, Don. The junk fees they're talking about are what I discussed, right? These commissions and so forth that financial advisors are paid to recommend certain investment instruments or products for their clients. And I get the concern around conflicts of interest, right? And receiving money to provide advice that's not in a retiree's best interest. But while that might clean up the incentive system within this kind of service space as it relates to commodity and fixed index annuity products, it's not really the main cause of what's causing people's retirement woes and their cost to skyrocket. So therefore, in my humble opinion, it's not really a substantial crackdown. The real contributors to these rising retirement costs are longer life expectancies, which is tough to fix, right? You don't want to really fix that. It's not really a problem necessarily. It's higher quality of life. But inflation, which the government caused, rising housing costs, which the government, again, is largely responsible for, and not to mention when I broke this issue down last time I spoke with you, but the sustainability of Social Security in the short and long term is also under some serious doubt. So baby boomers in particular, Don, are struggling to get the retirement savings where they need to be, and they're feeling anxious, particularly around the solvency of Social Security in terms of whether they'll need to rely more on their personal savings, which sometimes are not very fruitful.
And maybe you can go into a bit more detail in those points that you mentioned as to the cause of the cost increasing for retirement. And as well, if you wouldn't mind talking about how short are potential retirees from their goals?
Yeah, well, they're significantly short. Many retirees are struggling, Don, to even get their 401k savings to pre-COVID levels. And so what the Biden administration really needs to crack down on is not really junk fees, but these broader root causes for why people's 401k still has not reached the level that it was pre-COVID. A Fidelity reported that baby boomers had an average of around $250,000 in their 401k in December of 2021. And now Fidelity reports that they only have an average of $221,000 in there as of June of 23. So their 401ks are still down 11%. This is, of course, the fault of government and not the fault of these financial advisors that are collecting, quote, junk fees. But one thing, Don, is always certain about the government. They will always point the finger at the private sector. But to answer your question, retirees are significantly short of their retirement goals. Forbes had emphasized this point recently, and they reported that the average American retiree was almost $500,000 short of what they needed in order to retire comfortably. That's an immense mountain for our retirees in this country to climb. And a junk fees crackdown, which might help a little bit, is really this regulation the Biden administration wants to put forth is really just a way of inserting the federal government into the financial advice world. And our retirees are not going to materially benefit from it to the tune of $500,000 in retirement savings, that's for sure.
Now, you mentioned that this is the government's fault, but I wonder, what about personal responsibility? What about setting aside money, saving more into your retirement fund? Is that a factor as well?
Absolutely. People are not typically saving, the recommended percentages of their income that they should every year. And that definitely is a contributor to why people are falling short down the road in their lives. Last time we spoke, I spoke about the need for youth education in terms of financial literacy and what was happening in the personal finances of individuals in this country, and also the shortfalls the government has handled their finances. But I just want to emphasize the Biden administration comes out with this regulation and they want to hold commodities and fixed income annuities to the same standard as other investment instruments, and they want to insert themselves into the financial advice space. I don't think it's a great idea. I think, in fact, the last entity that should have a say in the financial advice people are getting in the private sector is our government. North of $30 trillion in debt that it has no plan to pay back, continuous running of trillions in deficits by our government. Not to mention, our government cannot even keep track of its own money. The Government Accountability Office comes out with audit reports year after year, pointing out the fact that there are material weaknesses in the financial statements in pretty much just every agency in our federal government. So, in my humble opinion, the federal government should be the last party involved in investment advice here. Not to mention, this comes on the heel of what I felt is a very ill-advised ESG rule that the federal government issued, which pushed for investment advice and decisions to be based in part on climate change and social justice. And now we see sustainability funds, or the demand thereof, plummeting over the last year. So I don't like the idea of the federal government getting in this business. I think the private sector does a better job of this than the federal government. But here we are, and this is the world we live in. They want to get in between the retiree and their advisors. I would say even the worst of the financial advisors in this country might still give better advice than our federal government when it comes to fiscal responsibility and what to do with your money.
Well, what do you think then needs to be done to remedy this situation so that potential retirees have enough?
Well, I fear that the solution would have come a few years ago, to not shut down the world's largest economy due to the COVID-19 pandemic, because unfortunately it's left a lasting mark, Don. And as I mentioned before, people are still not quite yet to pre-COVID levels in terms of their 401k balance. But there are ways you can get ahead of it. You can take a close look at what we're doing with interest rates, which have damaged the markets a bit. You can continue to reel back regulations for businesses. A lot of these small businesses in metropolitan areas are still struggling because of a lack of foot traffic. And that has extended not just to small businesses, but large publicly traded department stores and other companies in which a lot of people have investments through their 401k. So you can do a lot of what's been done in the past, in the not so distant past, to strengthen the markets and to put more money in folks' 401ks. But as of now, it's not happening. And but I do think that there are some solutions on the table for your average retiree. Oftentimes, if the market's not doing well, there's other options you can look at. When interest rates are up, you have things like CDs that might give you 4 or 5% on whatever you put in there, guaranteed for just a year-long maturity. And so there are other investment instruments that your average retiree can look into, or forget about retirees, but folks earlier on in their life. Hopefully you don't get to retirement age before you realize the importance of saving, right? But if you just do some research, and I'm talking Googling for a couple of hours, you can figure out alternative methods to still get a return on your cash. So when there's a will, there's a way, Don, right? But a lot of this financial education doesn't happen at a young age in this country anymore. And so people are unaware of these things. Most people are just aware of Social Security and a 401k. So they make their contributions, the government takes money out of their paycheck, and they hope to see it again one day. But as I said before, the financial state of Social Security is very dubious. So a lot of baby boomers in particular now are starting to worry about that. On the last time I was on your show, we talked about that 2034, 2035 horizon in terms of solvency of that program. But that's another subject for another day.
So the reality facing some, if nothing else works, is it that they simply have to delay retirement, I wonder?
Well, I will say, unfortunately, that appears the case. I mean, Americans are retiring later and later. It's not uncommon to see somebody working well into their 80s. I talked about extended life expectancy earlier. Frankly, also being a leading cause of rising retirement costs. If you live longer, you need more in the bank in order to live out the rest of your lives, right? And we want to live longer. We want to have long, enriching lives. But the reality is that with advances in healthcare, and people becoming healthier and healthier and living longer and longer and getting the care that they need, you need more money to live out the rest of your life. So that's one challenge. But I can't emphasize this enough. Inflation over the past few years has been debilitating on retirement savings for people. Cost of living just continues to grow at a rate that retirement savings and returns thereon are not. So a few things causing deficits in people's bank accounts and 401ks heading into retirement, but extended life expectancy, inflation, energy costs, housing crisis. I mean, these are all really root causes of this problem, Don. And my point is that it's not really just nominal junk fees that people might be collecting in order to recommend you a financial instrument. I do see the merit in trying to eliminate that conflict of interest in the financial advice business, but I don't think it will put a dent in the retirement issue. And I think that the Biden administration goes a touch too far in trying to get itself involved in the business of essentially influencing or providing financial advice to retirees in the private sector. I don't think the government has a good track record to be doing this.
Well, we've heard stories that not only are people not saving, but some are actually taking out money from their 401k just to meet, expenses. So, the situation is bad for some, it seems like. But Derek, I think that's all the time we have for today. As always, thank you so much for talking with me.
Thanks again for having me. Appreciate it, Don.